Let's wait a few more seconds before we start. Just let everybody come in. Okay, let's start. Hello, everybody. Welcome to our webinar on the path to holistic customer and revenue growth with MoneyLion. Thank you for joining us today. I'm Eran, CTO and co-founder at Voyantis. Very excited for the opportunity to host Mark Goodwin on our webinar. Mark has spent the last 12 years in the e-commerce and fintech industries. He has experience in strategy, pricing, analytics, and insights. Mark is passionate about the intersection of data, analytics, and business strategy. Welcome, Mark. Great to have you here with us.
Thanks for having me. Glad to be here.
Perfect. So before we get started, just some housekeeping. Please send any questions you have during the session in the Q&A feed at the bottom of the screen, and we'll try to stop and address them throughout the webinar. The session is recorded, and the recording will be shared with everyone following this session. Mark, tell us a little bit about yourself and your role at MoneyLion, please.
Sure. Yeah. So I lead our strategy and analytics team. I sit within our marketing org, and I have a focus on all things marketing, customer, but it also expands to some product as well. So I'm heavily involved in the strategy and product analytics for our consumer marketplace business, which is a fast-growing part of MoneyLion's ecosystem that allows us to bring kind of third-party offers and additional product offerings to our customers right within our app and our website. With a broad focus, my role requires me to wear a variety of different hats to support and drive business operations, strategic marketing projects, analytics, as I mentioned, customer insights. So I really get a chance to sit right at the intersection of the data and organization and the business strategies we deploy.
That's a very interesting place to be in, right?
Sure.
So how do you define MoneyLion's mission?
Yeah, we're really, I mean, put simply, we're on a mission to give everyone the power to make their best financial decisions. What that practically means is there's a lot of areas of traditional financial, personal finance situations that are broken. Going bank to bank to get a loan can be frustrating. People need to improve their credit scores. A key part of their personal health and their ability to access credit and capital. They don't know where to start in improving that. And we really believe by giving millions of customers access to a library of financial content that enlightens them in our app and on our website, alongside an ecosystem and a marketplace of trusted products, both first party and third party, it can enable them to take back control of their circumstances and really shorten that distance between kind of financial literacy, where they can get engaging content, consume it, and get connected directly with a product that might meet their needs. The key is that everyone's circumstances is unique, and we want to be able to effectively offer a solution for every personal finance situation an individual might face. So we really want to be kind of there for them in a unique way that each individual has.
Thank you. I can attest, we'll talk about it later. We've worked together professionally, and we work with a lot of customers from different verticals. I think MoneyLion is one of our favorite in the sense that we're very passionate about what you're doing as well, regardless of business results.
That's great to hear. Yeah.
Thank you. So I'd like to start by talking about the current trends in consumer fintech and what are you seeing right now?
I mean, I think the key word I'd use is AI, or artificial intelligence, keywords, I should say. That's obviously not unique to fintech, but it is definitely going to become a big part in shaping the experiences customers have with fintechs. Some of those advances, as fintechs embrace AI, will be very apparent to customers as their product experiences, their product flows, the personalization they offer customers starts to become more and more powered by AI. Other use cases for AI in fintech: security, fraud protection, risk. It'll be less apparent maybe to the customers and the experience they have, but it'll still work to benefit them as they can feel like their assets and their personal information is secure with fintechs. So the other key trend I'd say is fintechs really taking a lot of their solutions, their data to other institutions, more traditional institutions. So enterprise solutions where the products, data, and services that fintechs have built and managed will be positioned to augment capabilities of, think of traditional smaller regional banks, traditional financial institutions and their ecosystems. So I think those are two key trends that I'd watch and I think are going to be big in the both the immediate future and the years to come.
Yeah, actually, the data points that you have, as mentioned, are not just you, just fintech generally, right? Are very, very rich, and I think it's people don't realize how unique that is in the industry, in the sense that like we work with SaaS, with local services, with gaming, with apps, e-commerce, and I think the big advantage here is that off the bat, fintech companies have very rich data points, which allows them to tailor and provide value very, very quickly and realize value, while other services probably need to wait a little bit and see the interaction. And again, interaction data is always very interesting in fintech as well. But the starting point is harder. Like there's less to use, to tailor and customize. And fintech is very, very well positioned to understand and provide value immediately. Just need to know how to utilize it, right?
Yeah, that's exactly right. I mean, if you have someone's bank transactions, their credit score, those are simple ways that we can, I mean, they're not simple data points necessarily, but they're ways that you can really get a window into someone's personal financial circumstances and be positioned to serve them in a unique way that maybe is more difficult for other industries to have that level of data richness, right? That would enable that sort of personal connection.
Yeah, exactly. So what's your approach to diversifying acquisition stream? Moving on to more practical, growth areas. How have you balanced efficiency and scale across channels?
Yeah, well, I mean, we believe diversification is key to our success, to be efficient, right? To borrow kind of a finance metaphor, think of it like an investment portfolio where we believe the right strategy and a sound strategy is to operate in many channels. We don't want to kind of put all of our eggs in one platform or one partner, because you can find yourself at the mercy of the auctions, the pricing on that particular channel, and it can elevate your CACs quickly. So we believe that finding quality customers in all the places they engage is really what's critical for success. So one of the things we have is a financial marketplaces business through Engine by MoneyLion, which allows us to put the MoneyLion brand in a network across hundreds of channel partners, and it allows us to match relevant third-party offers with MoneyLion offers, and think of these they're widgets, they're advertisements that fit seamlessly into articles and content on relevant sites where people are looking for financial education, financial content, Investopedia, CNBC, just to give some examples. But as users go through those flows, we collect lead data, which allows us ultimately to get information about a customer and what they're looking for and make an informed decision about whether or not MoneyLion or even another one of our partners might be a good fit for their individual circumstances. So instead of relying, just on an Apple or a Google or Facebook, which we do, right? We do leverage those channels. We have this broader portfolio that allows us to move our budget across a variety of channels and really optimize for efficiency in doing that.
That's so interesting. I have two interesting points to indicate here. One is that your approach to this, the diversification, is really, I think, a very strong attribute for you because you're much more resilient, right, to changes. I imagine it creates a challenge on the other end of modeling the value of users when they come from so many different channels and also basically are being steered in very numerous user journeys, right? So it makes it harder to model value.
Yeah, no doubt. It's harder to model value. Attribution, right, is a challenge because we have, to your point, a variety of different journeys that a user might take to find their way to MoneyLion. So having a strong data foundation, a strong data engineering team, strong in-house data science teams is critical to making sure we can harness all of that information and then use it, right, to create signals that can help us optimize and identify the channels where we're getting quality and leaning into that to be able to find efficiency.
So one interesting thing that really resonated with me is that when you describe this as like a portfolio, like you borrowed from financial sciences, basically, on risk mitigation and risk allocation, right? That's actually really resonates. Voyantis, the company, I'm one of the co-founders, and when we started it, one of my main metaphors was marketing is the same as managing a portfolio, right? It's look at campaigns as your stocks. You can look at channels as your stocks. You can look at creatives as your stocks. At affiliates as your stocks, and then you need to manage risk. And
Right.
I think that the missing piece to manage risk is to understand the risk. Like you've got a bunch of stocks. How do you know what the risk reward, like the alphas and the betas of the stocks basically are there? And I think that's the CAC and the LTV, basically.
Yeah.
Right? If you know the CAC and if you know the LTV, you can now manage your portfolio.
Yeah, and I think as we'll talk about a little bit, some of the partnership with you guys, there's technical analysis, right, that can be done too to help you identify, we'll say, arbitrage in the market or value in the market, right? And as you think of those, the way you optimize those campaigns, right, same way you'd optimize a portfolio, what's going to give you the best ROI forward looking, right? The past is the past, but how do we make sure we're optimizing for future value?
Yeah. So I love it. I just want to remind our audience that you can ask questions in the Q&A section if you want us. We will get to them later on. Just a kind reminder if you have any questions for Mark or for me, but mostly for Mark. I'm guessing you're here mostly for that. So let's continue, but we'll revisit the Q&A section later on. So can you share the analytics journey MoneyLion had to optimize customer acquisition and retention? What are some principles that you might be able to share? One area of business that you wanted to grow? What did you learn from that, and so on?
Yeah, I mean, well, we were just touching on this a little bit, but one of the challenges to that diverse acquisition approach is that there are, as we just mentioned, many permutations of user journeys that a prospect or a lead might take to find their way to our brands or our products. So we had a lot of data that we had to instrument, tag, track, and manage, right, to be able to evaluate all those touch points. So our in-house engineering and data science teams ended up building an in-house attribution model that really fits the business model that we're driving, to allow us to effectively track and measure all those touch points. So, it's an evolving process, but without that foundation, right, you don't know ultimately like what's the efficiency, what's the quality, and that was really where, as an organization, we felt we needed to start, and that is where we started to be able to get to where we want to go. So it's like you think of it as you're building a house, right? You need a solid foundation, and our measurement and our data is that foundation.
And well, attribution is always a challenge, right? Especially with many attribution files, many touch points. Any key takeaways in the sense that, like, if somebody is embarking on that journey of trying to improve or create an in-house attribution model for such a complex situation, like some do's and don'ts, or what's your advice on that?
Yeah, I mean, well, like there's a variety of different ways you can go with attribution, and look, I'll be the first to say no attribution approach is perfect. I think a lot of people always think about maybe there's a silver bullet out there that's going to give them every answer they want. I mean, there's attribution, there's incrementality analysis, right? Those all should play a role in how you measure the effectiveness of your marketing. I don't actually believe in a one size fits all approach. But in terms of like thinking about attribution, there's different routes you can go, and I think it might depend where you are as an organization, the strength of your engineering and data science bench, and the cost that you maybe have, because there's third-party solutions out of the box, right? They can come in and fit your business. Maybe that's a little bit better for if you have a simpler funnel or a simpler business model that you can use some maybe standard last click rules-based attribution that's going to allow you to start to get the measurement you want. If you do have maybe a more complex vision and many user journeys and you need some customization to it, and you have the data science and engineering teams to be able to harness that data, then that building something in-house can be workable as well. That's the direction we decided to go, but that's not necessarily going to be the best direction for every organization. So I would say again, take a look at your organization, where you guys are, where you want to go, and make an assessment that way. And each use case might be different, and there's going to be pros and cons and trade-offs to the different approaches you might take. But I do strongly recommend, even if you have attribution, to pair it with incrementality and measurement, so you can the attribution gives you kind of that evergreen measurement and data flow to help you optimize in real time, but incrementality is critical to be able to understand the effectiveness of your marketing and what a dollar is truly driving for you.
Thank you. So I think we'll move to talking about value-based bidding and ROAS bidding. So you've moved there. How did you conclude that you need to add ROAS-based bidding to CAC-based optimization?
Yeah. Of course. So back to that diversification theme we were talking about a second ago. That also applies with how we think about the signals and the optimization that we ultimately want to do, and how we target. So for a long time, we had operated optimizing for a CAC, and which was very successful for us, right? We were able to use the CAC signal as an ability for us to identify other lower cost users to acquire. The challenge that we started to find, though, is that CAC was not always necessarily the best signal for quality, or the intent of a long-term relationship, right? And at the end of the day, we know the formula is simple, right? We're putting $1 into marketing. We want to generate the most return for the organization. And that was CAC was not always going to be the most reliable predictor of that return. So we really knew that getting to an ARPU, average revenue per user, or lifetime value, quality-based signals would really help enhance our ability to deliver more out of our marketing investment and be able to ensure that the dollars we spend are the most productive for growth.
That makes perfect sense. And as you said, it's not that CAC-based optimization is not working. It's working. You could just, in a lot of cases, can do better, right? But also it doesn't kind of make sense to start with ROAS-based optimization from the get-go, right? You need to get your fundamentals there. You need to see that you've got enough scale. I can share that obviously doing target ROAS requires a more mature scale and history of the ad account to actually be able to successfully capture all of the potential value, right?
Yeah, and I assume we're going to talk about a little bit about our transition here, but without spoiling it. But that's exactly right. That CAC is a great signal, right, to use, right? You do want to acquire customers at low cost, but there are ways to enhance that.
So with that in mind, I actually want to open up a small poll to our audience. I will launch it in a second, and I'll just Just to explain what we're asking, we basically want to understand what the statistic here is with our own people. Where are you on your journey to value-based bidding or target ROAS optimization? I'll launch it in a second, but basically it's like a 4 options question. We say, no, we're just doing TCPA. We started implementing it, and then 2 versions of fully operational. And one of them is talking about static values. What I often see is customers using different funnel events and assigning static values to them. So, you know, sign up is $5 and deposit is $20 and so on, right? Trial is $3. And then you run target ROAS on several events together in Google, for example. And there's fully operational user level value-based bidding, either predictive or not predictive, right? So just I'm launching the poll right now, and we'll keep going. We'll talk a little bit more, and once we have some results on the poll, we'll circle back and look at them. All right, so okay, let's talk about MoneyLion and Voyantis. Why did you consider us? Why did you consider Voyantis as a partner?
Yeah, well, kind of coming back to like us, like internally realizing, you know, there's more than just CAC. We knew that predicted LTV, right? If we could know something in real time and know in much more real time the future value of a user, that would be benefit. And specifically predictive LTV, just having that data about your customers, right? Knowing early on in their life cycle how much value that they're going to bring to your organization or bring to your business is an incredibly valuable data signal. And every customer facing organization can benefit from it in a variety of ways. You know, there's forecasting, customer analytics, corporate valuation, and then obviously marketing optimization, which is why we're talking today. So sitting in that product marketing strategy intersection, I felt that, you know, the data alone Voyantis could bring to us when we first met and talked with you guys on that, through the tool that you guys have called Foresight, it could have a wide range of applications that could enhance the way your organization uses customer data. So I'd say honestly, really, I just saw it as a level of comfort with you guys, what you guys do, and realizing that there's a you know, a plethora of options of how that data could really benefit us and our organization for what we're trying to do.
Perfect. Thank you. Maybe to add some context, you mentioned Foresight. So just to explain to the audience, basically Voyantis provides 2 solutions. One of them is Foresight, which is basically LTV predictions provided back to your BI at the user level, predictions that keep updating over time, over the user's maturity and seniority. And the other product is signal optimization, which is basically a layer on top that actually streamlines and optimizes the sending of conversions over to the networks to optimize target loss. So yes, while signal optimization is the solution for basically user acquisition, Foresight is unlocking a lot of other use cases. So we're working with both. So just for the context, because you said Foresight. So just moving on, what were the challenges of adding value-based bidding to your portfolio of optimization? What was surprising to you?
Yeah. So I think the biggest challenge was when we first embarked on this journey is we thought, okay, maybe we can use a historical value. So our business model, again, kind of like contrasting to maybe a e-commerce company where the transaction happens immediately. We onboard a user, they set up an account, and maybe they take a loan, maybe they take our product Instacash. It can take time before that revenue starts to materialize for us. So we might not see the benefits for 2 weeks, 30 days, 60 days, right? The good news is it's recurring revenue, but it doesn't happen instantaneously. So we started attempting to kind of send backwards looking user level revenue, user level ROAS into the ad platforms, but because of how dynamic they are, it was like we were sending a very lagged signal that that was making optimization a little bit suboptimal. So contrasted to CAC, we could know right away, a user setting up an account, it's pretty instantaneous, right? Usually they enter some information and we know, okay, we've onboarded that customer and it costs X, right? So we figured to make quick decisions on optimization, we realized we needed a similar approach that could help us. If we really wanted to be effective, know in real time, what do we think the ROAS is going to be? And like, we thought, oh, well, could we use the backwards looking and guess? And that had its shortcomings, right? Because we could assign a value, but those values might be no longer accurate with, especially our business model that's very dynamic, in what users need and how markets and macro factors affect their needs, their seasonality, that occurs a little bit. So we felt a predictive model could help us effectively optimize for expected ROAS much more in real time. So that was a big challenge, and that's where we needed to get to, and that's where we found a workable solution in Voyantis. I was honestly surprised how well it works. Like in principle, we thought it would make sense, and we wouldn't have pursued it if we didn't believe it was the right approach or would have some benefit. And kind of estimated, okay, if we get a 10% ROAS, that would more than offset the investment we made in this partnership, and we saw multiples exceeding that. And obviously, the returns we saw on Google and Meta were very exciting for us.
Yeah. And we're very happy to be able to deliver that kind of business impact to you. So thank you. Just reporting on the results of the poll that we ran. So nobody is fully operational on user level dynamic values. 40% are just using TCPA, and 30% are in the process of implementing value-based bidding, and another 30% are using static values for target ROAS, basically. So that kind of makes sense because that's the target audience, right? People that are wanting to transition there, but it's an interesting, like, almost equal spread between those three. So thank you for participating in the poll. Let's keep going. So just mindful of the time, we have like a few more minutes. So I'd love to ask you about what were your expectations when you started working with us? How have they changed, and what are you looking forward for?
Yeah, so admittedly, when we approach some of these partnerships, sometimes there's always a little bit of skepticism because, people, teams will come in and promise, oh, we can make it better, we'll improve your returns, we'll enhance your performance. You're always going to hear that kind of up front when working with a partner. Another concern was I was worried, sometimes you bring in these partnerships and it's a large lift on your data science and engineering teams to get the data over to them, explain the data to them, correct, interpretation issues that the third party might have over the data. A lot of hand holding, right? Ultimately, that it ends up you're kind of like, oh, well, maybe this wasn't the right partnership, right? We're spending a lot of time and energy beyond what we expected. But my reservations were quickly assuaged when the team drove right in and quickly stood up a model that had a high degree of accuracy that was then passed back to our BI for our own teams to validate and start to utilize and put to work in other areas of our business. And it was a really light lift in terms of the way it worked. It effectively felt like an augmentation of our own data science team, and that's not even no hyperbole there. It was really very seamless. And so my expectations have very dramatically changed in terms of all the way from skepticism to very pleased with how it worked.
Thank you. Well, we only have like 1 minute. I'll ask you a short question, and then I see there's one question from the audience I'd like to answer. That just what should people consider when thinking about a vendor for value-based bidding or doing in-house, right?
So I guess I would suggest make sure you're clear about your own business goals and definition of value. And that's really where you need to start before you're thinking about a vendor, because you want to be able to come to the table with an idea of what you're looking to accomplish. And that's kind of how we approached it with Voyantis, is we knew what sort of success measures I alluded to we wanted to get to, So it could, when we started talking about what we would build and create together, it was very, very clear. And you kind of had that North Star in mind, so everyone can kind of get on the same page and build to that North Star. I would say I suggest talking to the vendor about the different clients they've worked with and the outcomes they've delivered, to get a sense if you might find if the success they've seen has similar or parallel applications to your own business model. One thing that was helpful for us that Eran and Voyantis team did was conduct a pilot, right, and allow us to measure and experiment and validate that the approach that they were going to help us deliver was the right one. Because they could have built something that worked just fine, and we had the wrong North Star metric in mind. And there's a variety of ways it could have gone wrong, but being able to have a partner that had confidence in their abilities and the alignment we had, before diving in, I think was really helpful, and gave me the confidence that they felt confident themselves they could deliver value for us.
Yeah, we believe in what we do, and so our business model reflects that. Thank you, Mark. One question from the audience is, I think, would resonate with a lot of people. What attribution model and bidding approach would you take as a small or medium business, and not like a large one with a lot of data? Specifically on subscription, I would say A, use retention and not LTV. It's enough. It's close enough for a subscription business. And B, do something in the middle. You don't have to have like a full-blown ML model. Just do a simplistic or simpler 4 or 5 variables model. Try that. That should already provide you with some uplift. So we're out of time. I have a lot more questions, but that's it. Thank you, Mark. It has been a pleasure having you with us, and thank you to our audience. And
Thank you. Thank you, Eran. Glad to join, and looking forward to more.
Thank you. Bye-bye.
Bye.